Another nice little picture, this time of the PPC new head office building. This is at the corner of, I think, Grayston Drive and Catherine, if I'm not mistaken. Also one of the properties we recently acquired from Tiber. If you look at the three main areas to our business today, it's the South African portfolio of properties, excluding V&A Waterfront, and that makes up about 76% of our total distributable income. The Australian entity, GOZ, which produced 513 million of distributable income, making up just short of 15% of the total. And then the V&A Waterfront at 332 million, making up just short of 10, let's call it 9.5% of the total distributable income of 3.5 billion. And that is up from the 2.7 billion paid out for the year June 13. And a lot of that growth obviously coming from the underlying acquisitions that we made during the period. Slide here depicting the, let's say, distribution or wealth distribution to all of our different stakeholders. At the very bottom of the slide, 418 million going to employees across the country. Shareholders getting the 3.5 billion. 293 million being paid to the minority interest holders. 1.8 billion to the providers of debt. 602 million to government in the form of taxes, direct taxes, property rates and taxes. And then the 40-odd million is the retained income or reinvested income, pretty much from the Australian subsidiary, where our payout ratio is not 100%, but is sitting at about 96-odd%. Look at the summarized income statement. Gross property income up at 6.4 billion, up 11.2%. South Africa up 10.4% and Australia up 14%. Property expenses up 12%. South Africa 10% and Australia up 23.3%. Leaving you with net property income up 11% at just over 5 billion, 5.036 billion. The other operating expenses in South Africa up 4%. And in Australia up 39.3%, combined up 13%, leaving with net property income after operating expenses up 10.9% at 4.7 billion. Interest costs of 1.752 billion and 1.285 of that in the South African entity and 467 million in Australia, leaving us with, or add to that, finance income of 841 million. The investment income from the waterfront, 332 million, sits in that number, and then the other finance number being 509 million. That includes the 165 million that we received on the distributions from AccuCap and SciComm, which was received on the 30th of June. And I know that there have been one or two questions from the analysts as to the impact of that and the timing of that on our financials. So we received it literally on the 30th of June, so the full distribution. The opposite side of the equation, for want of a better description, is the fact that obviously the shares that we issued in return to buy that stake were issued in April and May, and those shares rank for the full distribution for the 6-month period as well. So if you take, we issued about 191 odd million shares to purchase that stake. If you multiply that by the 82.8 cent distribution that those shares will be attracting, that works out at about 160 odd million, just short of 160 million. So the benefit, if you want, or the income statement positive impact, if you want, of that is only about 5 odd million. Excuse me. We then have an adjustment for the non-controlling interest, which is the minority shareholders in the Australian subsidiary. And that is, and some foreign exchange profit and taxation, normal taxation, 361 million. And at the bottom, you then get to our distributions, or the total distributions up 28.2%. Obviously, that gets diluted when you look at the additional shares that we issued over the period and results in 8.3% growth in distribution per share. Our expense to income ratios, I think, are managing to to remain at reasonable levels. SA entity 28.8%, the property expense ratio at 24.8%, and the operating expense ratio at 3.8%. So managing to contain costs and keep them in check. In Australia, we saw property expenses rise to 12.1%, and the operating expense ratio up at 5.3%. And the waterfront staying pretty stable at just below 30%, and a mix of that of 26.6 on the property expense side and 3.3 on the operating expense ratio. Consolidated balance sheet. Property assets 70 billion between South Africa just short of 50 and Australia at 20, just short of 21. Add the investment into the V&A waterfront at 5.5 billion, and our listed investments in AccuCap and SciComm at 4.5 billion. Total balance sheet debt, this is nominal borrowings, not fair value, at 16.5 billion on the South African balance sheet and 8.67 billion on the Australian balance sheet. Shareholders' equity, or NAV, at just short of 50 billion, 49.9 billion.